Thanks for being with us here on Business Now. Let's take a look at what happened at the property markets, the auction markets over the weekend. And across the country, 926 auctions, according to REA Group, with a clearance rate of just under 75%. Now, in Sydney, there were 216 auctions. The clearance rate there was 74.1%, but privately across New South Wales, another 1,410 properties were sold during the week. In Melbourne, it had the most auctions as usual, 446. The clearance rate here, 76.2%. Another 1,200 properties were sold privately. Brisbane had 28 auctions, a clearance rate 57%. Traditionally, it is lower. Additionally, another 1,121 properties were sold privately. Adelaide had 48 auctions. The clearance rate strong here, as it has been for the past few months. 81%, another 323 properties were sold privately. And in the ACT, there were 51 auctions there. The clearance rate down 70.6%, and another 74 properties were sold privately. So let's bring in here Eleanor, Creagh, the senior economist from REA Group, about these numbers. Eleanor, thanks for your time as always. Do you think these auction volumes in particular and the clearance rates tell us anything about the buyers' nerves right now?
I mean, certainly we're seeing that auction volumes are trending downwards. They're actually sitting at around a third of the overall volumes that we saw, say, earlier this year or this time last year. And I think certainly with clearance rates as well trending down, we're getting a sense that as the housing market has shifted, maybe vendors are having potentially less success at auctions. So we're seeing that buyers are kind of regaining the upper hand when it comes to negotiations. The fear of missing out has subsided, particularly with, for some buyers, expectations of price falls on the radar. And I think as well, a lot more choice playing into that kind of dynamic, which is seeing vendors having to kind of rein in their price expectations and that power at the negotiating table just shifting towards buyers, whereas last year was overwhelmingly a seller's market.
Okay, one of the statistics that is always, if you like, a bit of a litmus test for the strength of property markets is the amount of time that properties stay on market once they've been listed. Have you seen that change much at all across Australia over the past few weeks?
Yes, certainly. And I mean, you're exactly right there. We have seen that days on site have climbed Australia-wide. So in May, we saw days on site climbing 4 days from 35 days in April to now sit at 39 days in May. And we actually saw days on site pretty much climbing in every state and territory. Even the regions that have remained a little bit stronger today, like Brisbane and Adelaide, also saw days on site climbing. So again, it just speaks to that picture whereby we are seeing a lot more choice coming to market. We're seeing that buyers don't have to kind of jump on properties that are available for sale with quite the same speed that they may have had to last year. And that fear of missing out has really subsided, I think.
Okay, then another aspect of this is also that regional properties in recent times have been stronger even than the CBD city prices. So just here, again, this was people in many cases missing out in the cities, going to regional areas to buy, maybe for a home, maybe for an investment. Is that trend, is there any sign of a change in that trend? Because that's not been something Australia's seen for many decades.
Yes, certainly. And I mean, it's interesting. So if you look at regional areas as a whole, last month price growth was pretty much flat, but there was a lot of divergence when you look at particular regions, and certainly parts of regional New South Wales and regional Queensland. Price growth still remains strong. But what's really interesting there is where those hotspots, when it comes to price growth, have shifted to. So we're seeing that it's no longer those previous hotspots like the Illawarra region, the Southern Highlands, Shoalhaven, Byron Bay, the Richmond Tweed area. We've actually seen that the areas which are continue to record stronger price growth now are actually the more affordable regional areas. So it's places like Wide Bay in Queensland, South Australia's southeast region. And when it comes to regional New South Wales, it's places like the Capital region, the inland New South Wales, the central and central region, really. And I think, again, this speaks to the fact that as we are approaching, or as this cycle of exceptional price growth is kind of winding down, we are seeing that those hotspots or places that remain stronger on a relative basis are shifting to more affordable regions.
And just very quickly, as we're running out of time, Eleanor, the interest rate decision from the Reserve Bank tomorrow, what's your gut feel and will it have an impact on prices?
it's certainly going to be an interesting one. So we are expecting that the RBA will likely raise interest rates again by 25 basis points. I know there's a lot of debate out there with respect to how much the RBA might raise rates tomorrow, but we're still sitting on, I guess, the slightly more moderate end of expectations when it comes to what's out there in the market. I think that the RBA are likely to have kind of embarked on what is a more moderate pace of tightening. We are already seeing that, I guess, consumer confidence is weakening as the cost of living pressures mount and as the RBA have already raised rates and mortgage affordability is worsening. And I think that that's just one factor why the RBA are unlikely to be able to embark on what is the very aggressive trajectory when it comes to interest rate tightening that some people are expecting.
Yeah, Eleanor Creagh, always good to have in the program, Senior Economist at REA Group. Thank you so much today.